Hello, everyone. Happy Monday, January 31st. Hope everyone had a fantastic weekend, especially the Cincinnati Bengal fans and Los Angeles Ram fans. Congratulations on making it to the Super Bowl this year. I'm pretty confident everyone in the world didn't think the Bengals were going to make it this year. So, a special shout out to all the Cincy fans out there. Well done. Well done. Welcome to our special Monday version of the Best Lending Show, where we'll be updating you on current news in the market. Our goal and our team's goal is to always be educating you guys on all the updates that we're seeing coming your way in the market. And some of the big announcements that I have seen are a recent announcement from the Atlanta Federal Reserve President, Raphael Bostic. He recently was chatting with some journalists talking about what to anticipate in the next coming months. And he basically left it pretty open-ended, stating that everything's on the table. There's not a single maneuver that the Federal Reserve will not consider when they are analyzing the input data coming their way. But what particularly caught my attention was he is not putting off the table either that the Federal Reserve could raise rates by 50 basis points when they make the announcement. They tend to increase rates by a quarter basis point upgrade or by 25 basis points. And if they indeed do raise the Fed funds rate by 50 basis points, I think this would be a great shock to the market with higher volatility towards the downside. So that is something to always pay attention to. Anything the Fed says, anything a president of the Federal Reserve says, you have to always pay attention since all eyes are on the Fed. So just to be able to keep that in mind. Another thing that really caught my attention was the sentiment of the retail trader or the smaller trader in the stock market. And there was a recent study done by Sentiment Trades where they analyzed all of the options trading in the past week, and it reached an all-time high of 6.5 billion put options in the past 7 days. Now, just as a reminder, a put option is a bet that the market or price of any given stock, equity, sector will go down in a certain period of time. A call option is the exact opposite, where it's a bet on any stock, equity, or industry that the price of that item is going to be going up in the foreseeable future. So to have $6.5 billion of put options by the retail investors is a staggering number. And that tells you that the sentiment amongst retail is very negative and that they anticipate prices to be going down in the near future. Now, you can't always say that this will happen. That is just what is in the minds of the people watching the market on a given day. So, also to keep that high in mind, that we probably will be having some more volatility in the coming weeks and months. Now, on the real estate side, the most important factor for our borrowers is what is going on with interest rates. How is that going to help them, or where do you see it going in the foreseeable future? And we're currently trading in a range for the 10-year Treasury note of 1.88% to 1.77%. That would be the biggest macro indicator I would want you guys to focus on at this point in time. Is what do we break past this range to the upside or the downside, or are we just going to be trading sideways as the Fed figures out what they want to be doing as they analyze their data? So if we break higher than 1.88% on the 10-year Treasury note, brace yourself for some higher interest rates. But if we break to the low side, below 1.77%, we might have some relief in the bond market, which would make even happier buyers as we roll into the spring market. And last but not least, I did just want to put this as an opportunity to remind you guys on the announcement from Fannie Mae and Freddie Mac. They made an announcement that they will be doing loan level pricing adjustments to second homes starting when they purchase them April 1st. So a McLean Mortgage, roughly mid-March, if you don't close on a second home purchase by mid-March, you will have an interest rate adjustment to those applications. So if you have any clients that are interested in getting that vacation home or that second home, just keep in mind, in the next 45 days or so, if you do not close, there will be an interest rate adjustment to that loan. So just brace yourself for all of that. Obviously, do not hesitate to call if you have any questions or message our team directly. I've included all of my resources in the description below in case you would like more detailed information. But thank you so much for joining us today, and I hope you guys have an excellent week. Thank you so much.